Yes, welcome everybody to this live stream. I'm Ugo Unamka and I am a market enthusiast. Okay, so what we are facing right now is that big oil on course for near record $38 billion in share buybacks. Yes, that's the news from Financial Times, as you can see there. I know today is a holiday in the US. And it says here, Western energy majors are on course to buy back shares at record levels this year as soaring oil and gas prices enable them to deliver bumper profits and boost returns for investors. The 7 majors, including BP, Shell, ExxonMobil, and Chevron, are poised to return $38 billion to shareholders through buyback programs, according to data from Bernstein Research. So, investment bank RBC Capital Markets puts the total figure at $41 billion. You heard that right. That will be almost double the $21 billion in buybacks completed in 2014, when oil last traded at $100 a barrel, and the biggest total since 2008. Yes, the plans underscore the strength of companies that are reaping the rewards of a resurgence in energy demands as lockdown restrictions are rolled back. Gas prices are at record levels and oil is trading at a 7-year high of about $93 a barrel, resulting in big profits for the super major group, which includes Total Energies, ENI, and Equinor. So let's see whether we can find the current price of oil right now. So what you're looking at right now is the S&P futures. We're going to talk about that later on. Let's see whether we have oil, crude, US crude. US crude is at $89.83. The Brent crude, that is the one referenced in the UK or London, is at 91.70. Yes, that's what's going on. Let's find out if there's anybody out there. So banks, including Goldman Sachs, expect Brent crude to trade at more than $100 later this year. As we showed you earlier on, it's at $91 and some fraction. US crude is at $89, with some predicting that if Russia invades Ukraine, it will trigger an even sharper rise in energy stocks. Yes, no doubt about that. That is what is likely to happen. So let's see whether we can okay, yes. And then one of the officials at this RBC Capital said the sector, that is the energy sector or the oil sector, is in the best shape it has been for a long time. Now the question, according to this folk, this guy is Biraj Bokataria, okay, of RBC Capital, says the question is the duration of the cycle of this bullish cycle in the energy sector, this bullish cycle in the price of crude. The underperformance of the company's shares during the pandemic meant that management teams felt their shares were undervalued and that buybacks were cheap, he added. Shell is set to lead the pack, buying back more than $12 billion of shares, according to RBC and Bernstein. Chevron bought back shares worth $1.4 billion in 2021 and would spend $3 to $5 billion on buybacks this year. Pressure to cut emissions and uncertainty over future demand has meant that oil and gas companies are also investing less in replacing supply than in the past, leaving management teams with even more cash. So you can see what's going on here. So I mean, why wouldn't you be tempted if your stock has crashed? Over the last 2 years, your company's stock has depreciated because of systemic problems, due to no fault of yours. There was no demand for consumption of crude oil, to say the least. During the pandemic, it was just of late that we have started to pull back. For close to a year, people were all locked down, and there wasn't that demand at all as such. Now, I mean, obviously, your stock would have lost a lot of value because of that. And then you're seeing what's going on right now, and also given the fact that maybe you've not been investing in new projects to deliver yet more crude output. You definitely you're likely to be sitting on more cash and facing all of these things. This is a position a direction you're likely to go, buying back your shares, because they are a lot more cheap now. So yes, that's what we're facing. Oil majors prepare they are preparing for a bump path that is $8 billion in stock buybacks. So some critics have suggested buybacks are diverting capital away from the transition to renewable energy. Okay, so Nick Stansbury, head of climate solution at Legal and General in London, I think, said companies had to strike a balance given the uncertainties surrounding future energy demand. BP's 2021 results were its best in 8 years, and Chevron and Exxon reported the highest profits since 2014. So that's what we're facing right now. Amongst other things, and also right now, we all know very well that we have this crisis in Ukraine. So pushed, or rather brought about by Russia. But before we get into that, let's see what's going on with the S&P futures. S&P futures is at obviously the market is closed, but the futures are trading. S&P futures is at 114353. So the pivot, according to experts, was supposed to be 4358. If it closed the session of the 18th at 4358, where did it close? It closed below that. The S&P itself closed below 4358. So they're expecting that it is possible that S&P might drop further to 4212. So that's what expectation is. And right now it's showing strength. I would just pretty much in the same area. Pretty much, this is the futures, pretty much around where it closed. So that's what we're facing. And it wasn't a great session in the last. It wasn't a great one in the last session. Out of the 18th, the Ukraine crisis, Ukraine problem was an issue. Yes, and some experts are saying that what are they saying? It's a bad time for Putin and Russia to become an international pariah. Russia is challenged on many fronts. This is more than half of Russia's 110 or so battalion tactical groups facing Ukraine have now moved out of their camps and staging posts and are 35 miles or less from the border. And Joe Biden asserts that a full-blown invasion is imminent. This threat threatens disaster for Ukraine. Perhaps lethal damage to the Putin regime, and should provoke a major rethink of security and cooperation in Eurasia, not just Europe. Okay, so Putin is obsessed with Ukraine. One of the UK's most experienced senior diplomats observes he wants to get it back as he sees it as a part of Russia. Second is his obsession with NATO. He's serious about demanding US missile bases to be removed from Poland and Romania, and that NATO forces should not be allowed to exercise in member countries that were once satellites of the Soviet Union. Interestingly, he no longer talks of Russia sharing a common European home with NATO and the EU. Yeah. And above all, he wants rid of America's dominance of the alliance in Europe. You can see he has this is a growing obsession this Putin has. It's a big one. It's a big one. You can see all that this expert is pointing out. He is his name is Robert Fox. He's saying that first of all, I'm repeating what I read earlier on. Putin is obsessed with Ukraine, and then the second obsession is with NATO, and then the third one will be that he doesn't want America to dominate the alliance in Europe. These especially the last one, it's a big one, so we have a big issue we're dealing with amongst other things. So, but bear in mind that we are, all of these. I mean, nobody, the NATO and all its constituents, NATO and US, and Putin himself. You can't absorb anybody of blame in all of these things. This is not to say that Putin can justify anything he's doing today by what may have occurred in the past politically, because he is driven by all of these things because of politics. He can't justify any of those things, any bad outcomes that may have resulted from the political games that took place in the past. You can't justify them. You really can't justify them as grounds to put the world on its nerves right now. So it's according to the position of some other experts, he has probably miscalculated. So it's tough to say whether he's going to invade or not. It's tough to say because he has come this close to the border, and he's already using the separatists in Ukraine to begin some minor skirmishes. But at the same time, it's hard to say that he's not going to invade or attack Ukraine. It's really hard, but at the same time, if it does, he knows it's going to be really costly. But I guess he has to do something. He really has to do something. He has to do whatever he's doing now. He just feels he has no option other than to take this stance he has taken to assert his country, whatever it is, assert himself or the country. So what else are some of these guys saying? Okay, if he does order a major attack on Ukraine, it's a big gamble. The force of 150,000 now poised is formidable. It's about 60% of Russia's ground combat. So if it's 50%, then we're talking about up to 200,000 ground soldiers, I think, combat power. Okay, Ukraine is large by Western European standards, roughly the size of France, plus 2/3 of Germany. You can see it. That's not a small country at all. It could easily swallow up 120,000 ground forces plus 2 brigades of National Guard, militia, police. It took some 500,000 Red Army troops plus Warsaw Pact reserves to end the Prague Spring in Czechoslovakia in 1968. Sorry about that. Putin knows he cannot afford a long and difficult occupation. Ukrainians are shaping up for a guerrilla campaign of resistance and insurgency, which could become a civil war, which might blow out into Russia itself. Opinion polls from Moscow suggest Russians aren't keen on more war in Ukraine at all. Obviously you can imagine. So the S&P futures, let's update ourselves, is at 4347.99. Momentum is very bearish right there now. Okay, so the most serious unknown, to quote Donald Rumsfeld, is the depth and range of economic turmoil and the upending of stock markets, including Moscow, that an invasion of Ukraine would trigger. Russia's dominance of the gas market, supplying the EU as a whole with more than 40% of its gas, could be a double-edged weapon. It means Europe will have to find alternatives. They gassed tourniquet with Germany and Italy, but they know they have to go elsewhere now. It's a bad time for Putin and Russia to become an international pariah. Russia is challenged on many fronts, not least in the prospect of Iran going nuclear with the imminent collapse of the JCPOA talks in Vienna. There's also the increasing cost of military commitments in Syria, the Caucasus, North and Sub-Saharan Africa. For Europe, this is a stark warning. Europe and the world need a coherent and practical arrangement for security and cooperation, and it must include Russia and even accommodate China, given its growing European presence. Okay, yes, I think it's a good. There's no doubt about that. They have to accommodate Russia. They have to talk to Russia more and get them more involved with security cooperation. Definitely, they have to get involved. But does Russia want that? Because Russia is, or rather, Putin is obsessed with ridding the United States of its dominance of the European alliance. So that's a very difficult issue. That's a very difficult issue there. Yeah. So moving on, let's see what's going on elsewhere. While we are looking at the S&P futures at 4348 now. Remember, the pivot, according to certain experts, is at 4358 for S&P, but that's the cash. But this is the futures. They're slightly different, even though they're pretty much to some extent the same thing. Yeah. Okay, so there's also something about the Build Back Better bill, and we have a letter from a we that a letter written to the Financial Times. This is I'm reading from the letters column. It says here, U.S. public may balk at U.S. public may balk at bill for Build Back Better. Okay, so this correspondent, this person that wrote in says, you're right that crises offer learning opportunities. Okay, citing a piece that was written earlier on. Say, you cite Yellen's supply side policies as an example of the new ideas emerging during the pandemic. While Yellen as a scholar can contribute much, as a Treasury Secretary she often focuses on setting President Joe Biden's programs. In promoting his Build Back Better plan, she said that the federal debt of over 120% of GDP is manageable because interest rates are low. However, high inflation and anti-inflammatory monetary policy can increase interest rates too. Okay, rising debt service costs combined with high primary deficits will be hard to sell to the American public when the debt to GDP is already at its highest level ever. Okay, so that's the opinion of that person concerning the bill for Build Back Better. So the S&P futures is at 434.9.75 right now. So in a moment we're going to look at a few stocks. Okay, there's a company that is being talked about, is gradually getting popular. Let's look at it. Primary bead. What does this company do? Primary Bead is a regulated capital markets technology platform connecting public companies to their communities during fundraising. It says here primary bid raises $190 million to double down on making it easier for ordinary people to invest in IPOs. Okay, it says here. So the company is set for global expansion according to this lady here, backed by SoftBank's $190 million. So yes, this is one company that is raising funds, just raised funds of late. Let's find out what the news is saying about the company. Yeah, primary bid, champion of small investor, raises $190 million from SoftBank and another firm. That's what we're seeing there. So let's have a look at TTOO stock, penny stock, sub penny, sub $1, optionable sub $1 penny stock, optionable sub $1 penny stock. It's also a biotech stock as well. Let's see T2 Biosystems Inc. Let's see what's being what's been going on with the stock. T2 Bio System Sync. Its earnings outcomes came out on Friday, I believe, Friday the 18th. Let's see whether we can get to their website. Awarded emergency use authorization by the FDA. T2 SARS-CoV-2 panel. Product pipeline. T2 line panel, accurate and timely diagnosis for more effective and cost-efficient treatments. So this T2 line panel is designed to provide great accuracy in the diagnosis of early Lyme disease, which may help improve care and lead to better patient outcomes. The T2 Lyme panel identifies the bacteria that causes Lyme disease directly from a patient's blood. T2 Lyme runs on the FDA cleared T2 DX instrument, the same instrument currently used to run FDA cleared and CE marked T2 bacteria and T2 Candida panels. Okay, and then they have the T2 Chorus panel, RUO, T2 biothreat panel. This is the T2 panel RUO, and the T2 biothreat panel. Okay, S&P is at 4348. That's S&P futures 4348.50. somebody asked. See, there's a question here that says whether the company is going out of business. Okay, there's a question here, is TTOO going out of business? And then conclusion is TT is now among the walking dead of the equity market. This is as far back as 2019. So that talk has always been in place for some time now. Maybe you should also you should start looking at the puts for the stock, or is it too late for that? TTOO. Let's see what the options front for the stock looks like. The company has been in distress for some time now, for some years now. So in the last 1 month it has gained 18%. In the last 6 months it has lost 48%. In the last 12 months it has lost 83.5%. Let's see statements. Let's see whether we can find anything there. Another trend. Okay, 21 million total revenue 2021, which is higher than what it has been. It's at its highest since 2017. Total operating expense, okay, is at 71 million. So they're spending more than they're earning. So we have a negative of total operating income, a negative of 43, deficit of $43 million. So the deficit is worse than it was in 2020. Yes. This is TTOO. So I mean, you can now imagine why the stock is penny stock now, sub 0.5, as a matter of fact, sub $0.5. It's also optionable. Let's see what's going on. I mean, with the chart for the stock. You can see that over the last 1 year, definitely very bearish, as you can expect, as you would expect. But momentum just started to improve of late, but even though it cooled off as well. Let's look at the options. Yes, they're not attractive at all. You can see, if you wanted to buy them, you can see it's not wonderful at all. You can see the ask is 2.80, and then the bid is 1.25. There, it's not liquid at all. Not liquid at all. But it's good. It's good to observe. The stock is has been facing problems. It's good to observe what's going on with it. Okay, so we are also looking at what's going on with the S&P futures. It's currently at 4349 right now. Let's see what's going on with crude. US crude is at 89.98, Brent crude is at 91.87, and we told you that the oil majors are going to spend. They're buying back up to $38 billion worth of their stocks this year, 2022. That's what they're likely to do. Yes, Western energy majors are on course to buy back shares at near record levels this year, 2022, as soaring oil and gas prices enable them to deliver bumper profits and boost returns for investors. The 7 majors, including BP, Shell, ExxonMobil, and Chevron, are poised to return $38 billion to shareholders through buyback programs, according to data from Bernstein Research. The investment bank RBC Capital Markets puts the total at $41 billion. That would be almost double the $21 billion in buybacks completed in 2014, when oil last traded above $100 a barrel, and the biggest total since 2008. The plans underscore the strength of the companies that are reaping the rewards of a resurgence in energy demand as lockdown restrictions are rolled back. So yes, the lockdown restrictions are leading, amongst other things, to inflation, and indeed inflation of energy prices. Gas prices are at record levels, and oil is trading at a 7-year high of, as we indicated earlier on, for the Brent crude is about $91, for US crude is about $89, resulting in big profits for the super major group, which also includes Total Energies, ENI, and Equinor. So banks including Goldman Sachs expect Brent crude to trade at more than $100 later on this year, 2022, with some predicting that if Russia invades Ukraine, it will trigger an even sharper rise in energy costs. And speaking of Russia and Ukraine, let's look at some other things that's going on there. Let's look at what's going on there else as well. let's have a review of what is going on. We all know very well that there's a build-up of Russian troops on the eastern flank of Ukraine. We know that very well. Let's see what we can cover in that regard. So as it concerns the Russia-Ukraine standoff, on both sides of eastern Ukrainian front line, ravaged by an 8-year bloody standoff between government forces and Moscow-backed separatists, residents are bracing themselves for the coming of a violent turn of the conflict. You know that very well already. We know that already. So, and we also know very well that this is as it concerns energy as well, and how the supply of gas to Europe, which is mostly to Germany and Italy, is affecting things in Germany and Italy as well. And we know that Italy is unveiling plans to reduce impacts of soaring energy prices, and also probably cut down its dependence on Russia, which is not going to be an easy one. Their Prime Minister warned that any international sanctions targeting Russia's energy industry in response to aggression against Ukraine will hit Italy particularly hard. All sanctions that impact energy will impact Italy more than any other country because we are gas dependent, unlike France and Germany. Okay. Draghi said he unveiled the energy package, a package of $8 million to shield consumers and local authorities from rising energy prices to support the car industry as soaring electricity and gas bills threaten to undermine its recovery from the pandemic. So let's look at another stock, SF Shift. SLI Standard Lithium. Yes, if you just joined us, we know the market is closed today. And we've been told that if the S&P closes below 4358, and which it did, it closed below 4358 in the last session of the 18th of February 2021. Let's see, XPX, you see, closed at 43.48 exactly, 43.48. Okay, maybe just not low, maybe not below it, but that this is the key pivot. That's where it closed. There's a good chance it might retrace to all the way down to 4212, which is I think the lows. I think at some point it has reached it fell all the way down there. Let's have a look at the SPX. XPX. The key pivot is supposed to be 43.48, and I think it just closed right there. What does that imply? It implies maybe it may just move sideways or even retrace further. The chart is coming up. It's taking some time to come up. Chart is coming up, and we'll have a look at that pivot where it is 43.48, which is also where the stock, which is where that index closed. The S&P futures right now is at 4345. So this is the futures, but not exactly the index itself. So 43, this is around where it is, 4348, okay, approximately 4349. So there, some experts are saying that there's a good chance it may fall further again. You can see on this 1 year chart, this is below all of its key moving averages, the 200-day moving average, 10-day moving average, and 20-day moving average, way below them. So they are saying that they may fall all the way down to 4212. 4212 is just right here. 4212 is somewhere around here. 4212, 4212, let's get it. 4212, 4219, 4216, 4213, 42, yeah, somewhere around here. 4213, that's where it's expected to drop. So the last time was at this sort of levels was way back when. Last time was at that sort of level was, this is, let's find out when it was. It was at it was the middle of end of June 2021. So there's a prospect of a retest. The lowest of this year has been 4310. 4310. That's a closing figure. It may be there might be lower figures, but this is the lowest we have seen it. So there's a speculation that with this close at 4349 approximately, we might retest the lows of the summer of 2021. So we all have to brace ourselves for the prospect of that to happen. So you can see right now it's at a discount to all of its moving averages. It's a huge discount. Unbalanced volume indicator is bearish. Momentum is also weak as well. The 14-period slow stochastic oscillator for the S&P 500 index is also waning as well. Okay, the last time it was oversold. It should be, yes, end of last month. Yes, that's about the time when it fell below its 200-day moving average. But you can see accumulation is also still bullish. Accumulation is still on the uptrend. You can see that. Yes, there was a drop here, but all in all, the trend is still a bullish one as well. So even with this close at 4349 approximately, which is not so far off from that 4310. Well, quite far, 4326. That's the low. That's the lowest of this year. We can still see that the momentum is still holding up as well. Sorry, the accumulation is still holding up there. Let's see what Okay, they're saying here there's more to market volatility than Ukraine. Let's see whether we can find out what they're saying there. There's more to market volatility than Ukraine. Let's see. Well, I mean, we should expect that maybe, yes, that might be the case. Investors need strong stomachs to deal with large swings in asset prices. We covered that. Big oil on cost for near record $38 billion in share buybacks. Gold outperforms stocks and bonds as traders seek haven assets. Okay, European stocks deep after Biden put in some other greed in principle. Ukraine tensions drive stock market volatility while putting focus on energy security. So let's see what's going on CNBC. Okay, three interesting things here. Okay, gold prices are likely to drop towards the end of 2022, says UBS. Inflation trades are starting to work again. Here's where the money is going. Okay, let's look at this. While we wait for that, you can see the S&P futures is at 4342.12. Reflation trades are resurfacing. Travel and leisure stocks have picked up steam in this month, with ETFs such as Invesco's Dynamic Leisure Entertainment ETF and US Global Jets ETF, Advisors Hotels ETF are moving sharply higher. The action is as much tied to diversification as it is to soon to come warm weather and easing COVID-19 restrictions. ETF Trends CEO Tom Lydon told CNBC they are seeing rising interest rates and a threat of rising interest rates here in the US, but overseas, not all developed countries are suffering from that threat. People are diversifying to areas like emerging markets, where it's not only an opportunity to get a better yield, and you are also not going to be threatened by central banks necessarily being hawkish here like they are in the US at the moment. Another way to diversify is to invest in inflation hedges such as AXS Astoria Inflation Sensitivity ETF, according to that dude there. Typically, after a recession, you get this wave high in value cyclicals, inflation sensitive stocks. So about a year and a half ago, we put together an inflation sensitivity portfolio, according to the guy, who's also Davey, who's also his firm's chief investment officer. Yes, if you just join us, we are looking at what's going on. The S&P futures is below its pivot of $4348. Sorry, $4348, not dollars. What does that imply? According to experts, it doesn't an implication that it might drop all the way down to 4212. This is the sort of levels where it was as at the end of June 2021. Bill Gates says COVID risks have dramatically reduced, but another pandemic is coming. US warns that Moscow has compiled post-invasion kill lists. For Russia, taking action on Ukraine now might be less costly than waiting, says analysts. Next Bitcoin bull run won't happen until the end of 2024, says top crypto exchange co-founder. So we can see it's losing some steam now. S&P futures at 4335.89. And we also told you that, according to the Financial Times, the oil majors are likely to spend up to $41 billion in share buybacks this year, 2022. And I think the biggest of them all is Shell. Shell is likely to spend about $12 billion to buy back shares. You know, we know during the pandemic, the demand was very poor, and amongst other things, they still had cash on them, and they have also not invested a lot in new projects to produce more crude, increase their more crude outputs, and as such, they've now had a lot of cash on them, and also given the fact that crude and energy prices have been rising of late as well, so they have a lot. They're sitting on a lot of cash, and also the fact that their stocks have also, they took a battering from the lockdown, from 2020 to 2021. So given all of those things, you can see why they are probably trying to buy back, because their stocks are cheap right now, cheaper than what it was. I mean, maybe not, cheaper by various metrics. So that is probably what is driving this push to give back money to their shareholders, as it were. But indeed, critics are saying that they should have used the money to probably invest in more greener resources, green renewable projects and all that stuff. But what is certain is that what we need right now, before we need to smoothing things out, the drive to go green is obviously what is behind, amongst other things, this, and then coupled with the pandemic, is what is, amongst other things, behind this rally in oil, in crude prices. So they have to, are they going to be, would they be keen on investing in developing more resources, more projects, investing in crude resources? And I don't think they are really keen on that, because there's a lot of pressure on them, and also they are, some of their executives are getting rewarded for investing in ESG projects, that is environmental sustainability and governance projects. Let me have a look at let me give you a hint of what they're saying there concerning that. So all that push in that direction, directors getting bonuses for investing in ESG is likely to continue to affect crude prices, because if they are investing in and going in those sort of directions, it is not offering sufficient balance in ensuring that we have enough renewables and also enough fossils, because we need to have that balance until probably the renewables are good enough to sustain all of us. But right now, the renewables depend on the fossils. The renewable energy resources will depend on them, because even though the energy comes from the sun or wherever it is, but you have to manufacture those components, those things that are needed to get the renewable devices and products come out. You still need fossil energy. So the renewables themselves most certainly not enough. And we've seen that. We've seen that in China. They have even gone ahead to commission new coal plants and other stuff. So a good balance has to be struck. A good balance has to be struck, and we're not striking that. And let me see what I can get to, where they're talking about ESG and bonuses that okay, shareholders. This is a piece written on the Financial Times of today, the 21st of February 2022. It says here, shareholders wary as more bonuses tied to ESG targets. So I'm going to read part of that for you to hear. And it says here, Kevin Johnson, Starbucks CEO and the slice of his 2021 bonus by slashing plastic straws and methane emissions. An example of a trend by US companies to add environmental and social targets to bonus packages. So Starbucks joined Apple and Disney in adding new environmental and workplace targets to 2021 pay, according to an analysis by Centio, a data provider. Shareholders will get to vote on these provisions next month when the companies hold annual general meetings. Pay tied to corporate social responsibility has jumped above 20% at Russell 3000 companies, up from 7% in 2018, according to Institutional Shareholder Services (ESG), the proxy advisor's responsible investment arm. Pay provisions tied to workplace diversity hit 11% in 2021 from 2.5% in 2018, the proxy advisor said. So bonuses tied to environmental, social and government issues rise. Shareholders are skeptical. Investors are frustrated with big bonuses awarded with little accountability. A record number of S&P 500 groups failed to win investor support for bonuses in 2021. ESG pay provisions tend to be vague, and asset managers express concerns as if ESG pay replaced bonus targets tied to a share price performance. Then executives could be insinuating bonuses during a turbulent stock market hit this year. Okay, so you can see what's going on there. The point I'm trying to make is that they're trying to use, amongst other things, ESG and all that stuff to they're linking it to bonuses and all that stuff, so all of these things, they to some extent they can affect the cost of energy globally and all that stuff, and right now evidently they are not investing they're not investing enough in the current fossil fuels, fossil projects, to ensure that we have enough, obviously for obvious reasons. So yes, let's update ourselves with S&P futures is at 4330.62, retracing further. There's a speculation that it might fall to 4212. S&P futures declining sharply now, 4330. So if it's going to fall all the way to 4212, it's around there where it was as of late June 2021. Let's see. $4212. Yes, this is around where it is. 4212. So this is where it was. 4213. This is as of the 21st of June 2021. So there's a speculation that it could drop all the way down there. We know that sometime this year, 27th of January, the S&P dropped down to it closed at 4316 after reaching a high of 4812 as well. Even though it's not printed, it didn't close at that by that particular figure. So some are even saying, on the Financial Times for instance, they're saying that it is not just the tension between Ukraine and Russia that is behind the volatility in the markets. there are other things there which probably you may know as well. There's more to market volatility than Ukraine. That's what it's saying there. Okay, it's trying to hold up now. Momentum is improving. Momentum is improving. That's a good sign, at least as things stand right now. At least it's not going to drop off in the next 1 minute. So it's pushing up now at 4336.87. This is the S&P futures. So obviously the markets are closed today, the 21st of January. Let's see whether we can find anything there. The markets are closed, no doubt they won't be open. There's no news there. Well, a few things are coming out regardless, I think. Let's see this and see whether if it's a piece of news that came out today, the 21st. Yes, it is. It says Kremlin says no concrete plans for summit with Biden over Ukraine. The Kremlin on Monday, today the 21st of February, said there were no concrete plans for a summit over Ukraine between Russian President Vladimir Putin and his US counterpart Joe Biden, after the French president said the two leaders had agreed a meeting in principle. A summit might offer a positive path out of Europe's biggest military crisis in decades, and financial markets edged higher on the glimmer hope of a diplomatic mission. We haven't seen that. We haven't seen anything, maybe in Europe, but not with the S&P futures. However, both Washington and Moscow played down hopes of a breakthrough. Satellite imagery appeared to show Russian deployments closer to Ukraine's border than before. Western countries accused Russia of planning an invasion of its neighbor. Moscow denies planning any attack and has demanded security guarantees, including a promise that Ukraine would not join NATO, which is what NATO is not willing to agree to. Nerves were fourth afraid when Belarusian Defense Ministry announced on Sunday the 20th that Russia would extend military drills in Belarus that had been due to end. Russia has tens of thousands of troops there, north of the Ukrainian border. Kremlin spokesperson Dmitry Peskov told reporters that a phone call or meeting between Putin and Biden could be set up anytime, but there were no concrete plans yet for a summit. Tensions were growing, but diplomatic contacts were active, and a meeting of foreign ministers was possible this week. He also said that Putin would imminently address the extraordinary session of Russia's Security Council. The White House said in a statement that Biden had accepted the meeting in principle, but only if an invasion hasn't happened. Okay. So that's one of the things what's going on there. So let's quickly have a look at Standard Lithium. If there's any stock you want us to have a look at, you can always drop that in the comment box below. SLI. So for the session of the 18th of February, it closed at 5.27%. It closed up at, we had a gain of 5.27%. Market cap is $1 billion. 18% of the shares are held by institutions. No fresh news as such. So this was as this news was as far back as the 8th of February or 6th of February, 8th of February it says here. It's about the lawsuits, you know. We get that. You will always, from time to time, you see that such things, lawsuits against companies for one thing or the other. Yeah, we can see as of the 1st of November, the stock was at its peak of $12.27. At this time, some of the other lithium stocks weren't doing this well. You know, 27th of October was at $12.37. But after that, it started to decline. After that peak, after that 12.37 fell and got support from its 10-day moving average, spiked again to 12.29, and then this time around it couldn't hold it up and started to retrace, but got support at 9.91 level by the 10th of November. It now looked like maybe that was the end, but it wasn't. Fell again. Got support at $8 as of the 18th. That's about 8 days or thereabout, which may be less than 8 sessions, and then broke through the 10 and 20-day moving averages for the first time in about a month. And then you probably think, okay, things are improving now. No way. Moved sideways slightly, broke above those moving averages again, almost 1 month. Is it almost 1 month again? This is looking cyclical here. This is 1 month, 31st of January. It was above all those, the 10 and 20-day moving averages. This is end of November. Notice the trend, and this is also end of early November. Notice the trend there. Almost every month that was the case. This is January, December. Okay, let's look again. Can you imagine? This is a trend here. We just notice the pattern. Every month it is above its 10 and 20-day moving averages. This is the 1st of February, exactly above it. Maybe it's something we probably have to target. 1, 2, 3, 4, if not at least 3, because let's just put this one, 4 as a matter of fact, because from here it was pulling back and got support from this 10-day moving average and spiked. So there's a trend going on there. Could it be that the short sellers are probably buying back to close their books for the end of the month or there something like that. Even though we can see that in some cases it's occurring on the first day of the new month, but there is a trend going on there. There's a trend going on there. This is there's a trend going on there. Every month it is above, its closest right above its 10 and 20-day moving average all the way. They started all the way back in October. Yes. So it's something we all have to observe and see what's going on there. Standard lithium, interesting pattern there. So S&P futures holding up at 433.7, 433.8 now. So we also brought to you this news concerning Primary Bead. It's a fintech company that has raised about $190 million to make it easier for retail investors to invest in companies that are about to do an IPO and stuff like that. Okay, which Primary Bead helps companies that are going public or public companies that are raising more money offer their shares to retail investors, that is ordinary people, not professionals, alongside more traditional share sales. It has raised $190 million. Okay, so the company operates with some 60 channels to enable investments, which include brokerages and apps that people use to make investments today. That list also likely to continue to grow. The company's mission is to bring the public back into the concept of a public offering, giving ordinary people a chance to invest directly in IPOs alongside banks and other large professional investors. If public markets were invented today, would they look like they did 100 years ago? No. Services will integrate with APIs, with mobile apps and more accessible investing, he said. It's a system in need of an upgrade. SoftBank, which is the company that, amongst other things, SoftBank is a key company that invested that $190 million. SoftBank, its Vision Fund 2 is leading this round, a Series C round, along with participation from previous unnamed investors, previous backers in its $50 million Series B in October 2020 included the London Stock Exchange Draper Spirit, Omar's Ventures, Fidelity International Strategic Ventures, ABN AMRO Ventures, MTEK, and Atward Ventures. Okay. Primary bid is not disclosing evaluation, although a note on the round in PitchBook from January, when it noted $150 million had been secured, pegged at a valuation of $650 million. That may have flowed from a report on Sky News at the time that first floated rumors on the round and put the pre-money valuation of $500 million, if those figures are okay. So let's update ourselves with the S&P futures. Is at 4335, and US crude is at 90.46. It has increased, and Brent crude is also has increased as well. That's 92.35. Momentum on this S&P futures is oversold at the moment. Is ExxonMobil buying back stock? Let's see. This is according to Market Watch. I told you earlier on that they are likely to spend up to 41 billion. Some are saying 53 billion. Let's look at the ExxonMobil stock. ExxonMobil, this is as at the 1st of February. ExxonMobil resumes buybacks with a $10 billion program. The company said it has initiated a program to repurchase $10 billion worth of stock over the next 12 to 24 months, ending a more than 5-year buyback hiatus. The Ivan Texas oil giant, which paused its robust buyback program in 2016 to focus on paring its debt load and paying its rich dividend in October, had said it expected to resume repurchases this year. Exxon, which has about 4.23 billion shares outstanding, sports a market capitalization of nearly $319 billion based on closing price, which is around where it is right now as well. So this is not up to 10% of its market cap, but it still can move the needle a lot. Okay, ExxonMobil up 7.2% last 1 month, up 4.67% in the last 6 months, up 46.7% in the last 6 months, up 12%, sorry, up 47.7% in the last 12 months. Let's look at the chart for Mobil. So yeah, the line trend is a bullish one. You can see it took it to a higher gear from the end of the year. As a matter of fact, beginning of this year, you can see it spiked on the as of the 11th of January. It had spiked from where it was, has gained roughly around $11 in 11 days. in 11 days. Since that time, it has continued to push. So the high of this year, its 52-week high, as a matter of fact, was 82.39, achieved on the 7th of February. So it's actually cooling off, as a matter of fact, cooling off now below its 10 and 20-day moving averages. What is momentum saying for mobile? Unbalanced volume indicator is waning. Momentum is also waning as well. The momentum based on the 14-period Stochastic Oscillator is definitely waning as well. The MACD is below its signal line. RSI is also waning. So to the accumulation distribution, but you can see that trend. Accumulation has ensued, has kicked off. This is let's see when it all started. It has to be end of the year. Yeah, started end of the year. Started to accelerate from the beginning of this year, 2022. So I mean, we know very well what's going on. Energy prices are rising, and yeah, it's already the cost by, amongst other things, the fact that we are now restrictions, the COVID restrictions are being lifted more. The demand for energy is increasing. These stocks were in the doldrums during the pandemic. There was hardly any demand as such. So things are changing now. And they're also not. They have a lot of cash. They're sitting on a lot of cash, especially the major ones, and they have also not been investing in new projects, new fossil fuel projects. The renewable projects are not. They're not investing really a lot in that direction, in the renewable direction. Because for obvious reasons. So they have a lot more cash on them right now, and according to them, it seems the stocks are trading. Their stocks are undervalued. So let's look at over the last 3 years, see what the sort of prices we're looking at. Yes, it's taking some time. Okay, well, it's right about where it was over the last 3 years. This is right about where Mobil, for instance, was trading at. ExxonMobil was trading at. Okay, let's look at the 4-year. 3-year, 4-year. Let's look at that. 4-year will be all the way back to 2018. Okay, yeah. See us at let's see. Okay, right. This still for Mobil, it's still right about where it was for Exxon. Still about 27th of September. Right about, still not far away from where it is right now. So there's this stock we just ran into a pattern that has been developing. SLI, Standard Lithium. Standard Lithium we show you a pattern that has been in place since October of 2021. Okay, this is the pattern we're talking about here. This is the end of, or rather the first trading session of November 2021, and then the stock was above its 10 and 20-day moving averages here. And then also this is the end of November as well, roughly one month. It's also above its 10 and 20-day moving averages. This is, yes. And then by the same end, by the beginning of December 2021, it was still above the 10 and 20-day moving averages. And then also we have the end of December, and indeed the beginning of February, so beginning of January 2022, it's still above those 10 and 20-day moving averages. And then again we have the beginning of February 2022, still above those moving averages. You know, of late it has been retracing, but we notice that by the end of the month, it's for some reason it just spikes above those moving averages. So I'm suspecting that this may be because maybe short sellers are trying to balance their books, so they cover some of their short positions, and after that, once that session passes, that early first few sessions of the month passes, they continue their short selling. You can see that after all of those, after the end of after the end or beginning of the various months, as the case may be, you can see short selling is occurring. You know, not just short selling, people are probably taking their money off the stock or taking profits. You can see that they are taking profits or short selling. You can see that taking profits or short selling. So we are now gradually also coming to the end of February, and we can see now it is currently above its 10-day moving average, slightly above it. It's at where is it right now? It's at it closed at 6.39. It's at 6.39, and its 10-day moving average is at 6.37. So gradually above that 10-day moving average. So that's a pattern that's taking place. You know, so just take note of that and see what you make of it. So let's look at another lithium stock that's quite popular, ABML. Usually at the end of various months or various weeks or months, they tend to do that. Short sellers or hedge funds, they tend to buy back their short positions, or rather buy back some of the shares they've sold short. So let's see whether that is the case with ABML. ABML hasn't come up yet. American Battery Technology Co. Okay, let's see. This is roughly the end of September. Okay, it was above its 10, 20, 50-day moving averages. Okay, and then as of the beginning of October, it was still above those moving averages. Okay, let's look at this. This is okay, middle. This is November, early, middle. Okay, so this is 7th of December. We don't have that pattern here. The American battery metals, we don't have that pattern, but okay, let's take it from the 31st of December, slightly above its 10 and 20-day moving averages. 1st of January, also slightly above its 10, so sufficiently above its 10 and 20-day moving averages, and in this case above its 50-day moving average. Okay, I think it's better spelled out on that Standard Lithium. Standard Lithium is also fending off allegations of deceit and all that stuff from short sellers as well. Let's return and see what they're saying in that direction. While we're waiting for that, we can update ourselves with the S&P futures. It's just holding up at around 4334. This is around at about the sort of levels we have seen it of late. So momentum is very strong right now. Momentum is very strong. You know, once the momentum is strong, you don't need to really fear that about any impending collapse, especially depending on, especially if you're looking at it from the 1 minute chart. At least at this sort of levels, at least in the next 2 seconds, it's not going to bottom out. You can just rest a bit if you're bullish on the stock, on the stock or on the index or whatever it is you're looking at right now. So momentum is strong, just indicating that buyers are, right now in charge, and if they're in charge, then there are more of them, and there are less sellers. So it's probably clearing away from previous lows. That's what it's indicating. So this is SLR, Standard Lithium. Interesting pattern as the month comes to an end. We have 7 days before, roughly. In the US, it's going to be only roughly 5 trading sessions before the month comes to an end. We'll see what's going to happen with Standard Lithium, but it's going to close above its 10 and 20-day moving averages, which is also likely as well. Interestingly enough, the underlying trend for the stock is a strongly bullish one, but for some reason it was strongly bullish before, and it has, I think it's been the rate at which it has pulled back is quite high. Yes, because we know of late, some of those news that was out there concerning the stock may have affected it to retrace faster than the 50-day moving average could catch up. You can see the 50-day moving average above all the other moving averages, which is an indication that there was a fast retracement, a fast race towards the bottom. It's above the 50-day moving average. So if it begins to move, if it continues to move sideways, there's a good chance that this 50-day moving average, which is also fallen, may fall below the 200-day moving average. It's not far away from it. Let's get the difference. 50-day moving average is at 7.66 and the 200 is at 7.01. So with time, it will, in about within 2 months, if the stock doesn't do well, that is likely to happen. So the momentum for the S&P futures is waning in now. Is at 433.29. There was an indication that if the S&P doesn't close if it closes below 4358, which roughly did, I think 4359 or thereabouts, If it doesn't, if it closes below that pivot, that key pivot, then there's a good chance it may fall further to 4212. 4212. Let's see whether we can get the S&P futures, get SPX. You can see 4348. Yes, the key level was 4358, so clearly it closed below that key support 4358. So there's a speculation that it may continue to retrace further, and we are gradually seeing that. We can see that clearly it is below, it has dropped further, so we are looking at there's an expectation that it should drop down to 4212. Okay, let's look at S&P index. It's not giving us the chart. I think the best way to get it is to use this. Yes, we have it. So 4212 is somewhere around here. 4212, no, somewhere here. is somewhere around here. This is where it was as of the 21st of June 2021. Is that the case? Yes, 21st of June 2021. So there's an expectation that it will retrace further. This is an expectation. So right now it is at right about where it closed, 433 or thereabout, 433, yeah, somewhere around here. That's where this is where the futures are right now. 4332. Yes, if you just joined us, the news out there is that big oil on course to near record. They're on course for near record $38 billion in share buybacks. Some are even putting it at 53 billion in share buybacks. Obviously, we know that oil or crude has been rising for some time now, not just of late. It's been rising since last year. You can see crude, US crude is at 90.147 and Brent crude is at 92.075, and these oil executives are saying that their stocks are trading at a discount, that it should be more than what it is today. They were all battered during the pandemic, and of late now we're seeing a demand for crude. So some of them are making a lot of money of late, and they want to use this opportunity to impress their shareholders. So they are likely to spend up to as much as 53 billion, as you saw it there, 53 billion, to keep their shareholders happy. So let's see what's going on, and there may not be much going on. Let's look at CNBC. A very scary concept. Energy ministers fearful of oil prices surpassing $100 per barrel. US warns that Moscow has compiled post-invasion kill lists. US ambassador to the UN has said the US has credible information that Russia has compiled a list of Ukrainians to be killed or sent to camps following an invasion. Western officials have said that Russia may use false claims about the ongoing conflict in eastern Ukraine as a pretext for an invasion. The US has warned that Russia is preparing for a full-scale assault in Ukraine very soon, as President Joe Biden agreed in principle to a meeting with Russian leader Vladimir Putin, which they have denied, which the Ukrainians have denied that they are not haven't agreed any meeting. Wall Street analysts share hedging tactics as Russia-Ukraine tension mounts. So let's see what Kathy Woods is saying about her innovation stocks. While we're waiting for that, okay, the S&P futures has also timed out. Says high innovation stocks are way undervalued and recent fund losses temporary. Kathy Woods of ARK Investment said Thursday the 17th of February 2022, the technology companies in her innovation-focused portfolio are drastically undervalued, and she believes that her fund's recent sell-off is short-lived. We've had a significant decline, Wood said Thursday on CNBC's halftime report. She believes the innovation is in a bargain basement territory. Their technology stocks are way undervalued relative to their potential. Give them 5 years, give them 5 years, they are running deep value portfolio. Okay, her flagship fund, ARK Innovation ETF, was caught in the epicenter of the technology sell-off of 2022, down 2.6% year to date. Some of her big holdings, including Zoom, Teladoc Health, Roku, have tumbled as much as 70% this year on expectations of rising interest rates. Their biggest concerns is that investors turn what they believe as temporary losses into permanent losses. That's what she's saying. Higher rates typically punish growth pockets of the market that rely on low rates to borrow for investing in innovation, and their future earnings look less attractive when rates are on the rise. Okay, she said she doesn't invest in any of those mature big tech companies like Microsoft. Okay, the ETF bets on companies in forefront disruptive technology in a variety of industries from DNA to automation, robotics, and artificial intelligence. Her top holdings include Tesla, Exact Sciences, UiPath, and Coinbase. Today, they have investors doing the opposite of what they did in the 1990s. They are running for the hills. It's risk off because of inflation and interest rates, and hills are their benchmarks. They are running to the past, would say. If they are right, if she and her ETF are right, then if they are right, and the disruptive innovation that is evolving is going to disintermediate and disrupt the traditional world order, those benchmarks are where the risk is, not our portfolios, according to her. Despite the big underperformance, her ARC hedge fund has attracted more than $70 million in net inflows year to date, according to FactSet. The innovation investor said she believes the inflationary drag on growth stocks will end ultimately, and deflationary forces will return. A lot of what's going on is supply chain related, she said. She doesn't think the deflationary forces building in the economy are pretty strong. Okay, let's see whether there's any more news out there. This is today, the 21st of February. It says ruble's sinks past 78 versus the dollar. Stocks plunge on Ukraine nerves. Russian ruble dives past 78 versus the dollar. Ruble hits lowest since January 27th. Stocks plunged to lowest since November 2020. Russian assets buffeted by Ukraine tensions. Okay, the ruble slid to a more than 3-week low on Monday, the 21st of February 2022, erasing earlier gains in a volatile session, and Russian stocks plunged as Western fears of an imminent military action in Ukraine outweighed hopes that diplomatic efforts would yield results. The Kremlin said there were no concrete plans yet for a summit between Putin and Joe Biden, but that a call or meeting could be set up any time, offering a possible path out of one of the most dangerous European crises in decades. But Russian assets highly sensitive to any news over Ukraine headed lower as Britain warned that a Russian invasion of Ukraine was highly likely, and reports of sporadic shelling continued. Yeah. S&P features, we have it's timed out, so let's see whether we can get the price of oil right now. Brent crude is at 93.54. WTI is at 91.07. Okay, and these are current prices. Hey. I will probably bet going up. Left to me, I would say going up. Good morning, Paul. Oh well, it's afternoon here. I'm in London. Yes, oil is going up, and they are buying back their shares. Did you saw you saw the thumbnail? They say they're going to spend up to 53 billion, or rather conservatively around 38 billion dollars to buy back. Did they block your account? Can you still access your bank account? No, they are not open today. No, it's I think President's Day. I think. Okay. So, is it a holiday as well in Canada? Well, enjoy the holiday while you can. Yeah. Well, he's using the tactics he knows best. Yes, they are open. Yes, there's no holiday today. See what is being said here. Largest US pension bought AMC, GameStop, and Berkshire Hathaway stock. Interesting. the largest pension in America, recently loaded up some volatile stocks, invested in Warren Buffett's firm, and trimmed a position in a sleeping software stock. In the fourth quarter, California Public Employees Retirement System more than quadrupled investments in AMC and GameStop, two high-profile meme stocks, and dramatically lifted its holdings in Berkshire Hathaway, Warren Buffett's investment firm, and probably the polar opposite of a meme stock. CalPERS, as the pension is known, also sliced off nearly 11% in its stake in Palantir, a provider of data analytics software. So they're actually literally going against you, Paul. They're slicing their stake in Palantir, a provider. Obviously, Palantir is a provider of data analytics software. The pension disclosed the trades, amongst others, in a form it filed with the SEC. CalPERS declined to comment on the investment changes. It manages $480 billion in assets, more than any other public pension in the US. That's good. I mean, that's positive, because no matter what you have, what our opinions are about any stock at all, the best, how would I put it now? If they are attracting money, you can't fault. You can still give your opinion about it, but money is, if the fact that money is going in there, is just to some extent, especially money from pension funds. As far as if they're going there, then there's something there. There must be something there. There should be something there, because normally you would expect some sort of stability to occur when they go in there, when they buy with the depending on the amount of stake they take up in the stock, so depending on, it doesn't, but it's not like it, how would I put it now, regardless of what our opinions are, if they are investing, there must be something there about GameStop and AMC then. So it seems strange that CalPERS embraced both the more volatile names amongst growth stocks and one of the most stayed in the value stocks, but the pension has made unconventional investment choices in the past. In 2000, CalPERS sold its position in tobacco stocks and imposed a limited ban on investing in tobacco-related companies, but it has investments in marijuana producers. Consistency has been an issue as well. The CalPERS has seen 6 different investment officers over 2 decades, when the average tenure for the posts is 6 to 7 years at pensions. But CalPERS is below average by one important measure. Its latest accrual annual report showed its funded ratio stood at 70.6% as of June 30, 2022, meaning that it has 70.6 cents on hand for every dollar of obligation. A study by Pew Charitable Trusts found that the average state pension had a funded ratio of 71.3% using 2019 data. CalPERS funded ratio was little changed from 70.2 both in 2019 and 2018 and 70.1 in 2017. Yes, they have money, and they can, yes, they have more money. They can always move the markets. They can move any stock at all. If they want it to go south, they'll go south. And the coordinated squeeze has dissipated. It's no longer there, I think. the company bought 503,000 AMC shares in the fourth quarter to lift its stake to 619,400 shares of the movie theater chain. AMC stocks rocketed nearly 13 times in price in 2021, while the S&P 500 managed to rise 27% by comparison. So far in 2022, shares are down 34%, while the index has slipped only 9%. AMC stock benefited in 2021 from investors on social media and trading platforms encouraging others to buy shares of the company, though many meme traders faded in the new year. In January, AMC pre-announced a strong fourth quarter and made moves to reduce debt. Yes, by all means, man, do whatever you can to make the most out of all that is going on. And I think let's have a look at the shares, the options of AMC. They're likely to have very good spreads. Okay, this has a better spread. The 18 strike has a better spread, only 1 cent. 0.98 and 0.97. That's a good one. You can see the volume for the last trading session was where it was most, 6,601. Amongst other things, that has to be the reason. Good fair spread. This one also 19 has a good one as well, and you can see the volume as well, 5,300. That's the next one. And then the $20 strike has the most of them, of 14,524. That's the volume. Open interest also the largest on this February 25th series. Yeah, but the spread is not so wonderful, but not too bad as well. 0.43 and 0.41. This is also good. Okay, 19 years. I mentioned it earlier. Okay, I'll have a look at the the pictures. Yes, Yes, the doctor is too. How would I put it now? Yeah, it's a bit too much. Yes, just a bit too much. Yes, too. But he eats meat, right? He eats meat, right? Yeah. Okay, I will have a look at it. Yes. Okay. Yeah. I mean, that's good. That's good. That's good because my problem is just going totally vegan and totally. I mean, that's it. Doesn't. I mean, yeah. I think. I mean, the most he could be saying is about the exercise and. If it's as it concerns the fasting, I'm already doing that. I'm doing on some days during the weekdays. On a day like this, I'm probably doing up to 10 hours of fasting. Something close to 10 hours. I can always do it up to 11 hours. Exercise, I may not have enough time. I just do squats, push-ups up to 140. Some years ago, I used to do up to 300 in the morning, and I'm gradually getting there because before now I could hardly even get to 80. Now I'm at 140, so I can always get back to 300 and 300 400 push-ups before some 20 years ago. And squats, do up to 70 of them, and then then I walk a lot. I also run from time to time and all that stuff. Yeah. Yeah, I mean, pretty much. I mean, there's not really. I mean, I can imagine. Yes, fitness and all that stuff. That's probably largely what he'd be talking about, and maybe going to the gym, maybe not. But I think I will listen to him because he's a doctor. Because I. Okay. Exactly. Yeah. That vegan bullshit. No, forgive me, man. So saying bullshit, but vegan is just a bit off it, man. Yeah, by all means, man, vegetables and meat. Why there could be nothing wrong about that. You know, nothing wrong about that. That's very wonderful, man. I mean, the idea, the concept. I mean, it's who has. All it's all good, man. Vegetable and meat, combine them, very good. Yes, you know. Yeah, they'll tell you. Dr. Egbert. Is it Egbert? Egbert. Is he a real doctor? That's what I should have asked. Yeah, yeah. Okay, so he has a doctorate in chiropractic, Doctor of Chiropractic, okay, from Life University in Marietta, Georgia. So he knows what he's talking about. Stan Ekberg. Oh, 10 intermittent fasting mistakes that stop weight loss. Have you tried this food for 30 days? I don't think this will be the best for me. No breakfast. I think I have to eat breakfast and then fast till end of the day. Oh, steak for breakfast. Oh wow. And after that, you fast till yeah. I have to keep doing that now. Yes. keep fasting and fasting and get used to it. I mean, the thing about it makes sense. I mean, it's logical, Just there are other benefits as well. You develop some discipline as well. Oh, he's talking about is that fish he's talking about there that should be banned? That looks like a salmon. Oh, not good news. Yeah, so that sounds good. Steak, eggs. I don't think I will probably personally, if I'm going to eat steak, maybe not egg. If I'm going to eat egg, as a matter of fact, I have not eaten any egg. Okay, well I have, yes, but not. Yeah, I have, yes, but I can count the number of times I've eaten egg since the pandemic. But I don't. I'll either eat egg or steak, and nuts, berries. Yes, yes, yeah, makes sense. Okay, the farmed salmon. Okay. Okay, back to what we were talking about earlier on. Global stocks fall on President's Day as Ukraine-Russian tensions simmer. Okay, yes, I'll have a look at the pictures when, yeah. Global stocks fall, oil and Bitcoin volatile, and what else is happening in the stock market today, the 21st of February 2022 globally? Global stocks fell on Monday as tensions remained high over the Russian military build-up on Ukraine's border, with officials in the West continuing to fear an imminent war in Eastern Europe. The Pan-European Stock 600 index was down 0.6%, while bourses in Asia ended the trading day broadly lower. Tokyo's Nikkei 225 declined 0.8%. US stock and bond markets are closed today in observance of President's Day, but US stock market futures continue to trade. Futures of the Dow Jones Industrial Average were 60 points or 0.2% lower. S&P is supposed to be here, but we're not getting anything. And the index tumbled 232 points Friday to close at 34,079. S&P futures were 0.2% into the red, and futures for the Nasdaq were 0.5% lower. Attention remains squarely focused on the prospect of Russia invading Ukraine. Russian troops have amassed the country's borders in recent weeks amid Moscow's objections to Ukraine's possible membership in NATO, the Western Defensive Alliance. Markets already on edge at the moment. So markets already on edge at the end of last week. The increase in tensions over the weekend has merely served to put further downward pressure on markets as violence in the eastern part of Ukraine ratchets up a notch. Okay, so sentiment is being driven largely by headlines. US officials said Sunday that they believed Russia has decided to invade Ukraine, which helped push stock market futures lower. An announcement of plans in principle for Joe Biden and Russian counterpart Vladimir Putin to meet and seek a diplomatic resolution delivered some optimism. Lifts US futures early today, the 21st of February, but gains were undone after a Kremlin spokesperson said it was premature to talk about specific summit plans. So this is how they are saying sentiment has been driving these indexes. Okay, this is as of today, the 21st of February, 8:20 a.m. Eastern US time. From an investor perspective, one of the most important implications of the Ukraine crisis is how it would impact the supply of oil. Global crude supply is already tight and demand fundamentals are strong. Prices were trading around 7-year highs before Russia ratcheted up the pressure on Ukraine. Russia is one of the world's largest producers of oil, so sanctions or any other restriction on its supply from war has the potential to cause the price of the commodity to surge even further. Well, whatever they have to do to make sure it doesn't lead to any war. Oil prices were volatile on Monday after tumbling from around $93 to $90 on Sunday as fears of imminent war eased. Futures for US benchmark West Texas index crude rebounded slightly, up 0.5% in the day to $91.50. In recent days and weeks, oil prices have doubled higher in anticipation of supply disruption that the Ukrainian conflict will bring. Yeah, they have to realize that. I think, they have to gradually realize that, even though they know that, but unfortunately, that's what it is. I know. Well, he knows. Putin knows that very well. Trying to start anything, it's not going to be wise economically over the long run. because in as much as there's oil in Russia, but economically, it's going to be really costly if it begins to spend all that money on fighting ideas, and all that stuff, and he can't, in as much as he's a strong man, he will not be able to defend himself against the people when things go wrong. So that's I'm talking about something that is in the remote now. So well, I well, some to a great extent, I believe that he probably will not attack Ukraine. Probably may not. There's a good chance he may not, and even if it does, it's going to be in a very, very small way. Very small way. Or may take advantage of the fact that Ukraine may not want to retaliate. And they're already doing so, because the separatists they are backing. They're already attacking positions in Ukraine. So they're really doing that. So. Yeah, or he could also come up with other moves. He could also use use surgical means. Taking out key figures in Ukraine and all that stuff. That's something else that they can also do as well. That's easily something that they can do, and without really anybody saying that they have invaded Ukraine. Yeah. Oh yeah, no doubt about that. Yes. That's why I call the whole thing is all the games that's been going on for some time now, and unfortunately, they've Putin himself is trying to assert himself. It's not he's not the only one who is to blame here, to be honest. So it's the whole game, and unfortunately, he's the lone guy in Europe who's in that sort of position at the moment. Maybe him and Belarus, the Belarusian leader. Yes, I know. It's complicated. Not as simple as that. It's not as simple as Yeah. Even though, of course, whatever deceit or whatever game played against him and his country has been purported. It's really they can't really justify any war as such, but why not? She can always. It's all in the game. It's all in the game. So yeah, it's all in the game. Yes, it's all in the game. Okay, in tandem with stocks, Bitcoin and other crypto assets have felt the pinch of a risk-averse mood among investors over the Ukraine crisis, and okay, the truth about the whole thing. Yeah, it's possible. Yes. I mean, yeah, well, yes, I can imagine it's not the right thing to be saying right now, to be, trying to say point. I mean, it's not popular for the media to probably try to get to the root of all of these things. Yeah, well, to some extent, they are saying that NATO has they've disclosed. For those who didn't know that NATO, yes, is now in the satellite states of the former USSR. So is that enough? Is that all that is there? Maybe or maybe not. Okay, Bitcoin's an unwilling participant in the volatility that is hitting all risky assets from Russia-Ukraine tensions. Okay, Bitcoin's a roller coaster ride won't end anytime soon, but it could get ugly if Wall Street sees a major sell-off if investors begin to expect a prolonged military conflict. Okay, Paul and every other person, thank you very much for joining this live session. I'm trying to see whether it's going to be possible to live stream again tomorrow. If I do, there's a good chance I may not have I may not the audio that much, but I will always respond to comments if that's okay. Oh yeah, yes. Okay, thank you very much. See you tomorrow. Yes, and yeah. Okay, thank you all very much.